Jack, Vanguard is moving from strength to strength, seeing flows of over $1.5 billion a day, increasingly thanks to ETFs. Does Vanguard's size and scale make you proud? Does it make you nervous, or maybe a little bit of both?
Well, certainly a little bit of both is a nice out you've given me. I was never in this business to build a colossus, but as I've told people many times, I was too stupid to realize that if we gave investors the best deal they would ever get, I'd be building a colossus. And so here we are, 25% on the way to a 25% market share of mutual fund assets, something that no one has ever achieved anything like before. There's been a little rotation over the years, but the 15% was the high market share for the 3 or 4 firms that reached the top.
Yeah, and increasingly it's 2 firms as well. According to Bloomberg calculations, Jack, we're less than a decade away from Vanguard and BlackRock managing a combined $20 trillion in assets. What specific risks does this duopoly create, especially as we see the bull market age?
Well, let me first say, be careful of extrapolation. I don't know what genius thinks those numbers are right, and they may be right, but there's no guarantee they'll be right. A lot of funny things happen along the way, strange things, and new products get invented. Markets go up and down. That won't be good for anybody if they go down, anybody in this business, because shareholders tend to act badly in declining markets. So I wish there were more competition, to be honest with you. State Street is trying, but for some reason the numbers would suggest they're not succeeding very well. So what used to be an oligopoly, really, of the 3 of us, Vanguard, BlackRock, and State Street, dominating the index field, it's really pretty much becoming a duopoly, and certainly in cash flows, it's a duopoly. And I'd say, come on in, the water's fine to all of our competitors. I wish people would compete, but it's a tough business to compete in, because if you divide it into 2 sections, traditional index funds, all the darn money goes to the investors. And money managers don't like that. They're in this business to make money for themselves, not necessarily make money for investors. So, and then when you get into ETFs and their rapid growth, it's become certainly become a marketing business where new ideas, you've seen the new funds that are coming out. We now have one that is, short, retail, and long electronic marketing.
Yeah.
That's talk about a product of the times. And we've got the Republican and the Democratic ETFs.
I think you watch our show.
We've got the drinkers ETF, the distillers. And where it ends, nobody knows.